Well, I'm Nagendra Rana. Good morning. The topic of the day is rural insurance in India. Rural insurance in India. The Indian law states that insurance companies should be accommodative of persons in the rural sector or social sector, persons in the economically vulnerable or backward classes of the society. So workers in the unorganized or informal sector, etc. In the Insurance Act 1938, Section 32B and 32C is where this particular law can be found. It defines the percentage of the business that insurance companies are expected to put aside for the persons in the categories mentioned above. So further, the IRDA has tried to accommodate the two sections of the Insurance Act by making it compulsory for insurers to offer general insurance to support business in the rural sector as well. The IRDA has specified a minimum 2% of total gross premium during the first financial year, a minimum of 3% of the gross premium in the second financial year, and a minimum of 5% of the gross premium in the third and additional financial years. The plan must include insurance for crops. So various programs have been launched by the central government of India for the benefits of marginal farmers, small farmers, agricultural laborers, etc. The Integrated Rural Development Program have integrated these programs since 1980 with the help of funding from the central state governments. Now the main objective of the program is to make sure that the rural families involved are provided with working capital and assistance in the form of income, generating assets, etc. So institutional credit, subsidy, etc. will be offered for the same purpose. For the beneficiaries of IRDP projects will be protected with the special insurance schemes. The policies come with the reduced rates of premium and simplified procedures for claims. For the rural insurance features and benefits rural policies, the following can be insured under rural policy like sub-animals including honeybee, silkworm, livestock including sheep, cattle, goats, property, for example, agriculture pump sets, plantation and horticulture crops including grapes, rubber trees, and persons, for example, Grameen accidents. So according to the IRDA rural sector, rural sector can also be defined as such only if it is fills the criteria like has a population of less than 5,000. The density of population in the area must not be more than 400 per square kilometer. A minimum of 75% of the male working population must be engaged in agriculture or related work. So the market value of the cattle may differ according to the breed, time and area. A qualified veterinarian determines the sum insured based on the particular animal's market value. Security of the animals is based on the market value or the sum insured, whichever is less for scheme animals. For scheme animals, the policy is issued as a breed value policy and claim are settled for 100% of sum insured. So the premiums are decided normally by the veterinarians. So the fact that 70% of the population in India lives in the rural areas and contribute to the development of the country in a big way makes it important for them to avail schemes meant for their welfare. It would not be wrong to say that farmers and their agriculture businesses play an important part in the growth of the country. Thus it makes sense for this section to get coverage as per their needs in the form of rural insurance plans. So rural insurance ensures that families living in the rural areas have a safe and secure future so that they can lead a happy life. The insurance helps them to cover risks related to various aspects of their life Rural insurance policies come with the affordable premium rates and faster claim process. The rural insurance includes a wide range of plans to cover various sections. In case of loss of crop or death of animals, individuals can claim benefits. A region with a low population density and which is at least 75% of the population of a male is included as agriculture comes under the rural section. Because of the financial instability of individuals living in rural region and the death of the cattle, crop failure, etc., the Indian government announced different schemes for the profit of the rural section. These schemes are united with the Rural Development Program and financially backed up by the state and central governments. As per Section 32B and 32C of the Insurance Act 1938, the insurers expect to offer a fixed percentage of businesses to individuals living in social, unorganized, informal, the rural sector, red card, and economically susceptible sections as restricted by the regulatory authority. The regulation was issued to further implement Section 32B and 32C that made it compulsory for the insurers to underwrite business equivalent to 2% of the full gross premium for the first financial year, 3% of the full gross premium for the second financial year, and 5% for the full gross premium for the third financial year onward in the rural area. So the Pradhan Mantri Fasal Bima Yojana was launched in 2016 and replaces all the prevailing yield insurance schemes in India. This scheme has been launched with an impetus on the rural sector. This scheme has extended coverage under localized risk. Post-harvest losses, etc., are aims at adoption of technology for the purpose of yield estimation. Though increased farmer awareness and low farmer PM rates, the scheme aims at increasing the crop insurance penetration in India. So with the objective to meet insurance for all by 2047, the sector regulator IRDAI issued a master circular directing life and non-life players to do a certain percentage of business compulsorily towards meeting rural, social sector and motor third party obligations. All life insurers shall ensure a minimum percentage of lives in identified and allocated Gram Panchayat. The Master Circular on Rural, Social Sector and Motor Third Party Obligations said. So the Life Insurance Council, in consultation with the Ministry of Panchayat Raj, will identify Gram Panchayat for fulfilling rural sector obligations. Upon identification of Gram Panchayats, the council should indicate the minimum number to be allocated to each insurer based on mutually agreed parameters, such as market share or any other parameter. After the finalization of the first Gram Panchayat for each insurer, the council should share the list with the Insurance Regulatory and Development Authority of India. Similarly, the general insurer and the health insurance players should be allocated Gram Panchayat in consultation with the General Insurance Council. There are presently 40 general insurance companies, including 5 standalone health insurance companies in the country. So IRDAI in 2022 committed to enable insurance for all by 2047, where every citizen has an appropriate life, health and property insurance cover. And every enterprise is supported by appropriate insurance solutions. So to attain the objective, efforts are being made towards creating a progressive, supportive, facilitative and forward-looking regulatory architecture to foster a conducive and competitive environment, leading to wider choice, accessibility and affordability to policyholders. The share of life insurance policies sold by top private insurers in the rural area declined in the financial year 23-24 compared to previous year, because SBI Life, HDFC Life, ICICI Prudential Life Insurance, the top 3 players from the private sector have seen The share of insurance policies sold in rural areas dropped in financial year 24 as compared to the previous financial year. Max Life Insurance's share of rural policies recorded an increase in financial year 24. On the other hand, state-run life insurance corporation of India's share of insurance policies sold in rural areas jumped from 22.25% in financial year 23 to 47.72% in FY24. So the industry witnessed higher growth in sale of policies from Tier 2 and Tier 3 cities, while the rural areas saw a normalized growth, resulting in overall drop in share of policies sold in rural areas. In addition, there was an increased demand for unit-linked insurance plans in urban areas in FY24 amid buoyant equity markets. When the Union Budget of FY24, Finance Minister proposed that insurance policies, excluding unit-linked insurance plan or ULIPs with an aggregate premium exceeding Rs 5 lakh and the majority amount would not be exempt from tax. So the rule came into effect on after 1st 2023, which led to a surge in sale of policies in Tier 2 and Tier 3 cities in March 2023. However, the growth of rural and social sector policies grew at a normalized rate, lowering the share of the policies sold in rural areas compared to the year ago period. So the IRDA has launched Bima Vistar, an all-in-one insurance product tailored for rural communities across India. Priced at Rs 1,500 per policy, Bima Vistar offers comprehensive coverage for life, health, personal accident and property risk, aiming to bolster insurance penetration in the country. So the announcement was made at a summit by the IRDA chairman. According to this policy, the premium would be Rs 820 for life cover, 500 for health cover, Rs 100 for personal accident cover and Rs 80 for property cover. So for family coverage on a quota basis, the total cost is Rs 2,400 with an additional Rs 900 for other family members. So the coverage includes SMA assured of Rs 2 lakh for life, personal accident and property insurance, health cover known as Hospicash offers a daily benefit of Rs 500 for up to 10 days with a maximum payout of Rs 5,000 requiring no documentation. The agents selling the product will receive a 10% commission to encourage wider distributions. So, Bima Vistar would play a key role in protecting individuals and families from a range of risks. The initiative not only encourages more people to invest in insurance for their protection but also promotes financial inclusions. Bima Vistar's pricing will make it accessible to many, emphasizing the importance of intermediaries in promoting the product. The competitive pricing of Bima Vistar is expected to benefit many individuals and families by providing them with a reliable insurance solution at a reasonable cost. In addition to applauding IRDAI's commendable initiative with Bima Vistar, let the people encourage the inclusion of provisions that enables intermediaries to effectively promote, sell these products. So IRDAI along with the General Insurance Council and the Life Insurance Council is working on creating a Bima Trinity comprising Bima Sugam, Bima Vistar and Bima Bahar, a women-centric distribution channel aimed at rural areas. So Bima Sugam will be protocol or the platform. Bima Vistar is a product where we are trying to design it in a manner which will be accessible to the common man. It will be a bundled product of life, health and casualty and property. Thank you. Thank you very much.